Bitcoin has pumped over 100% this year, and we're only a few months away from a BTC supply rate decrease and a potential ETF approval. So if conditions are seemingly so bullish, where are all the retail buyers? Today, we're going to be looking at the current lack of retail interest for Bitcoin, and where better to start than the BTC Active Addresses chart. And what we can see here, just looking at the daily average users on the Bitcoin network, we're at levels we haven't seen since about 6 years ago. Really, there hasn't been a huge exponential sustained increase in Bitcoin active addresses in the last few years, really. We can see, if we just remove the daily values for a 7-day average, that we can see we have been trending up, but really for the last couple of years, we haven't actually moved that much. We can get better information on this if we look at the active address growth trend, which allows us to look at multiple different moving averages. So what I've done here is just isolated the 30-day or the monthly moving average of network active addresses and the 1 year, the 365-day. And we can see that there is definitely a long-term trend, especially if we just look at the 365-day average. This is definitely trending to the upside and probably a bit more promising than in previous cycles. We've seen even during the tail end of the bear cycle we've just gone through that this didn't really decrease too substantially. We obviously did decrease from our all-time high, but ultimately we've been gradually trending to the upside over the past few months. And with the 30-day, we can see here that there has actually been a fairly nice sustained period of upwards active address on the network. So this is fairly bullish, I suppose, but we haven't seen these big exponential run-ups that we've seen in previous bull cycles, at least not yet anyway. But even if we look at the tail end of the 2018-2019 bear cycle, we did get this massive run-up as Bitcoin went from about $3,000 to $4,000 to over $14,000. And right now we're kind of just holding this trend line. We haven't seen any sustained move to the upside. And what I've done here is I've actually downloaded the 30-day and the 365-day moving averages of the active addresses and plotted out this chart here to get the difference between these moving averages. So if I just draw on here, when this is equaling a value of 1, we see the 30-day or the 1 month and the 365-day or the yearly moving average of active addresses equals the same. Once this is substantially above 1, there's a huge increase in new users because the monthly average is substantially higher than the 365-day average, and vice versa. Once this is beneath 1, it means that we're seeing a decreased amount of monthly users compared to the yearly average. And we can see these peaks continuing to just get lower and lower each single cycle. But at the same time, like we said, we are seeing this potentially start to make higher lows. Even with all the bullish fundamentals, the positive price action is a little bit surprising to a few people, especially considering we're just above a value of 1 on this metric that I've created. Really, we'd be hoping for a bit more positive retail capital inflows, because the more retail coming into the space, the more money pouring into the crypto markets, the higher prices tend to push up. But if we just look at something like the Google Trends for the search term cryptocurrency, we can see that this is not showing anything like a large influx of retail demand. We can see here that the last time we had this huge spike up was probably around December 2020 to January 2021. And if we just go back to the active addresses chart here, we can see that this was pretty much just as Bitcoin was starting the latter stages of its bull cycle. We can see here we'd rallied from around $3,000 or $4,000 up to far surpassing $20,000, our previous all-time high at that moment in time, before we really started to see this exponential increase. And we can also look at the timings of this as well to maybe get a bit of insight into when we could potentially see a more sustained influx of retail demand. If we bottomed at around December 2018, and it took around 2 years to see this big influx in demand by retail users for cryptocurrencies and Bitcoin, then maybe it'll take about 2 years in this cycle as well. And if we go back to the active address growth trend chart here, we can see here that currently, as we bottomed out in November, December 2022, we can see that maybe Q4 2024 is when we'll start to see this big influx where we see this huge sustained demand and generally, hopefully, just pushing prices significantly higher. But realistically, we need to take into consideration that once we actually get these large spikes of retail interest, once we see new users coming into the network to try and accumulate, try and make some profit, this usually signifies the tail end of the bull cycle. So really, even though we don't have this retail interest coming back into the space to push prices significantly higher, if anything, that's actually a good thing, because the longer that doesn't happen, the longer we can have this sustained, slow grind up to the upside. Ultimately, I think the best way to really explain this is something like this, where we see this neuron activation. What really brings users into the space? It's exponential price increases. If users, new retail, are seeing prices of Bitcoin increasing a few percent every month, obviously that's great for us who are already in the space, but that's not going to really bring headlines. That's not going to really bring huge capital inflows due to FOMO and people not wanting to miss out on the exponential gains. Really, I don't know if it's correlation or causation, but once we see these huge numbers increasing of new capital inflows, new user wallets, new network activity, it's usually when prices have already started going up and probably going to start going down soon. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on lookintobitcoin.com, your #1 source for Bitcoin information. So just to summarize, we're seeing a steady and sustainable increase in active users, but we're still yet to see a large retail influx to Bitcoin, which, like we said, in spite of the halving event, which is only a few months away, a potential Bitcoin ETF approval, which is going to bring institutional interest, seemingly no one's really interested in Bitcoin and cryptocurrencies right now. And even though there's a parallel correlation to price and active addresses increasing, which would maybe make us want more retail coming into the space to potentially push prices higher, the longer the cycle goes on without new retail, it's actually probably better. We get this longer, more sustained, healthy, not exponential, overheated market conditions. So the longer this goes on, the more we can maybe accumulate and just see Bitcoin increase at a very steady but positive rate rather than these huge price increases, which obviously are great, but usually signify the tail end of a bull cycle. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to professional resolution charts, advanced macro and portfolio data tools, in-depth crypto industry reports, live and personalized indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. You also get access to these CSV data downloads, which I use to make the chart we looked at earlier, which is actually available on pretty much all the metrics we have, which allows you to create your own custom Look into Bitcoin on-chain derived metrics, which can give you additional insights that maybe are unique to yourself and can help your trading and investing. Thank you all very much for watching. Let me know what your thoughts are on the potential new influx of retail users, or if you'd prefer to, like me, maybe have this delayed as long as possible so we can have this much more sustained and healthy price increase. Thank you all very much for watching, and I'll see you in the next one.